And Scripps News congressional correspondent Nathaniel Reed joins us now this morning live from our D.C. newsroom on more on today's trade deal announcement. Good morning, Nate. So what more can you tell us about the details discussed in Geneva?
Well, look, this is going to be huge for the stock market, and we'll certainly see those numbers start to climb when the markets open in New York a little bit later this morning. And so far, we've seen the Chinese markets reportedly overnight erasing their losses from back in April, which is when some of these tariffs were first announced. But let's break down the nitty-gritty details of what now to expect. Those 145% crazy high tariffs on Chinese imports lowered by 115 points all the way down to 30% tariffs on Chinese imports, certainly bringing a lot of certainty for American businesses and consumers. Also less concern about the possibility of having to raise prices for consumers by a long shot to try and make up for some of those extremely high tariffs. But also, if you're a U.S. exporter, if you make bourbon, if you make Harley-Davidson motorcycles, even Elon Musk at Tesla exports a lot of cars to China. Their tariff rate also coming down 115 points from 125% all the way down to just 10%. So this is welcome news, not just for consumers in your 401k, but also for American businesses and Chinese businesses who really wanted and depended on those two markets. But there's a massive catch here, which you noted, Holly. This only applies for 90 days. These negotiations are ongoing. This was achieved by Scott Bessent, the Treasury Secretary, and the U.S. Trade Representative Jamieson Greer. Again, those conversations happening in Switzerland over the weekend, but they are by no means the last conversations that will happen. They still need to work out a more permanent deal, but for the next 90 days, we at least have some clarity about where tariffs are going to be, and they're not at those extremely high, punishing levels of 145 and 125% respectively.